How can you catch such momentum trades? I'll explain it to you step by step and also show you how to catch these kinds of trades. Here, you can see an indicator that probably looks like a Bollinger Band to you, but this isn't just a Bollinger Band. It may look like one, but the way we're going to use it is a bit different. So here's the situation where a red candlestick has formed, and that too near the lower band. So what do you think? Will it go down or up? There are a lot of people who say that whenever a candlestick forms near the lower Bollinger Band, like you can see here, this candlestick, or here, this candlestick, whenever a candlestick forms near the lower Bollinger Band, people say that buying comes in at that point. Like you can see here, buying did come in, but this isn't entirely true. It's not like as soon as the price comes near the lower Bollinger Band, it will always go up. Now, as we can see right here, what happened? The price broke down through the lower Bollinger Band and the market moved downward. And what happened as it went down? The market hit the target here instead of reversing back up. So in today's session, I'll tell you how you can catch such moves using these two indicators, and let me tell you that you should. You don't need to use any other indicators. You might have tried a lot of indicator strategies and maybe they didn't work, but the strategy I'm about to show you will be very beneficial for you. I'll show you how you can catch these momentum trades in today's video. Don't think that just because you've used the Bollinger Band strategy many times and it didn't work, this one won't either. In this strategy, I'm going to add one more indicator, which you can see here. This indicator will give you confirmation. Will tell you whether you should enter the situation that's been created here or not. For example, when a buying situation is created here, it will help you decide whether you should enter or not. What you usually do is use a single indicator here, like the Bollinger Band, and as soon as the candlestick forms in the downward direction, you take a buy trade here. And when it comes to the upper Bollinger Band, you take a sell trade. But you shouldn't do that. When it moves downward, you get better momentum, and when it moves upward, you also get better momentum. So let me tell you which two indicators these are, what their status is, how to add them, and what settings need to be changed in both of these indicators. I'll also explain what rules you should follow if you're trading with the help of these two indicators. And here, I'll also share a golden rule with you that you must use. If you don't use this golden rule, then the strategy for these indicators won't be beneficial for you. That's why you absolutely need to use this golden rule. I'll tell you ahead what this golden rule is and how you should use it. So here is the BTC chart. No matter which index you trade in, whether it's the US market, the Indian market, or the crypto market, you can use the strategy of this indicator in all of them. Here, the time frame we are using is the 5-minute time frame. If you want, you can use the 15-minute or any other time frame here as well. Now, let's add the indicator. For that, we'll go to the indicator section and search here. The name of our first indicator is... As soon as you type combo, Bombo Combo will appear here. Bombo Combo EMA VWA. You need to add this. It will show you something like this. You need to go into its settings. In the settings, you'll see a lot of things, but I'm going to tell you here only about the important ones. There's EMA here, but we're not going to use that. There's VWAP, and that's what we'll use here. You can see the color here. If it's on the upper side, the VWAP will appear green, and if it's on the downside, the VWAP will appear red. After that, here it says, the upper band is shown here, the average is shown here, and the lower band is shown here. So we need these three things. We don't need the background color, so we'll turn that off here. After that, you'll see HCLP here. You need to close that as well. Close anything else you don't need. Just turn off everything we don't require here. We'll turn all these things off. Now, as you can see, our first indicator is set up, where we're only taking these four things. First is the Q app here, and second is the Bollinger Band. Here, the third is the average, and the fourth is the lower band. Now we'll click OK, and as you can see, our first indicator has been added. Now we'll add the second indicator here. For that, we'll go to the indicator section and search for the name of the second indicator, which is DMR. Here you'll see Directional Movement Index. Add this one. It'll show you something like this. I'll go into its settings. In the settings, you'll see ADX, DI+, and DI-. What I'll do is make them wider because that's how I generally use them. I'll make this one green. I'll make this one red, and in the inputs, the ADX smoothing will be 14 and the DI length will also be 14. So we'll leave these as default and click OK. Now both of our indicators are set up. Now let me tell you how to use them, whether you're trading in choppy markets or trending markets. First of all, you might already know about the Bollinger Band squeeze. Now, what is a Bollinger Band squeeze? Look here, the market is currently moving in a sideways zone. You can see here, this is a sideways zone. The market is moving within this zone here. How can you tell this? Whenever the Bollinger Bands start forming like this, okay, like they're forming here, it means the market is sideways. And whenever it breaks out, what happens? The Bollinger Bands spread out, as you can see here. So why am I telling you this? In this kind of market, people lose the most money. You need to ignore this. So how do you get confirmation in this? This market is sideways, but you can't confirm it just with the help of Bollinger Bands. You can see in the Bollinger Bands that it's sideways here, but if you look here, this is your ADX line. The white colored line is our ADX line. Whenever it's below 20, if it's below 20, it tells us that the market is sideways. First, you need to check here. A squeeze has happened, meaning the Bollinger Bands have contracted like this. And second, we'll see that the ADX line here should be below 20. So this is our sideways zone, and in this, we will ignore the trade. Now, I'll tell you how you can catch such momentum trades. I'll explain step by step, and also show you how to catch these trades. Let me replay it here so you can see it even better. Now, here's the situation. Let me bring it up here. Look, the market will be like this when this happens here, you can see that the Bollinger Bands are not squeezed. This is not our sideways zone. You can also see here that the ATR is 40 or 45, which means it's above 20, so this is not our sideways zone. Now here we will look for buying or selling opportunities, and for that we will follow some rules. First, I'll explain the rules for the selling side. So look here, there's a situation where the market closed the first candle, which formed a wick and went up, and the second candle closed nicely. You can see this now. So we will follow the rules here. The first rule is that the average line of our Bollinger Band, this red line here, which is the average line, the candlestick should close below it, and it should be a bearish candlestick. If we are taking a trade on the selling side, this will be our first rule. The second rule is that this is our DI minus, the red color, and this green color is DI plus. So for the selling side, our DI minus should be up, meaning it should be above, and this down. That's good. You can see here that our DI minus is above, so these two rules are being fulfilled here. Our third rule is that the ADX should be above 20. So here you can see it's at 21.75. These are the three rules you need to follow. So once we have these three things, when all three rules are fulfilled, what can we do? We can take an entry here. So what will we do for that? Here we will take a short position on this candle. What will our stop loss be? It will be just above the high of the candle. Our first target will be 1 to 1, and after that 1 to 2. Okay, after that we can see here, why is the market continuing to go down? Now you can see here that this has gone up and this is coming down. What does that mean? It gives you even more confidence that the market will move in our direction here. Whenever this goes upward like this and this comes downward, it means the market will move in our direction. And here I can wait for a bigger target. So you can go for a target even higher than 1:2. When should you exit? Let me tell you. You should exit when this starts to reverse here. Now look, when should you exit here? You should exit here. See, this is starting to reverse and come down. You can see here, this candle, here you can exit. If you took a short position here, all your rules will be fulfilled after that. So here you can, if you do that, you can see here that you have achieved a 1:4.22 target. After that, if you enter here, as I mentioned, if you take an entry here, if you take a short position on this candle, all the rules are being fulfilled for you. Here too, your stop loss will be just above the high of the candle, a small stop loss. Your target should be 1:1 or 1:2. You can see here that your target will be achieved, and then you can exit your trade. Here we will only take a 1:2 target. Why? Because you can see here, this is coming downward. And this hasn't gone upward, it's still coming downward. Here it went up, which means the momentum is picking up. In the same way, you can look back and see whether this works or not. Now, let me tell you about the buying side. The first condition for the buying side will be that there should be a candle that closes above this average. So here you can see it closed above. Here too, you can see it closed above. Here as well, it closed above. And here too, you can see it closed above. All four of these candles closed above here. Our second tool will be, here, we need to look at this green line. This is the DMI plus. It should be above. You can see it here. Here it's above, here too it's above, and here as well it's above. Now, why won't I enter these? First, you can see here that the BB squeeze is on, which means it's sideways, just like I told you earlier. Second, the ADX here is below 20, as you can see here. Now, I won't enter here either because even though all my other rules are being fulfilled, this third rule, the ADX one, is not being fulfilled. So here, we will ignore it. When will we enter? When the ADX goes above 20 here, like you can see here. So if we are taking a trade here, our stop loss will be here, and our target will be 1 to 1, and after that, 1 to 2. So you can set your targets like this. Now, if you look back, you can see here as well that our ADX is above 20, all our rules are being fulfilled here, so we can enter here. You can see here too, we can enter here. Similarly, on the selling side, we can also enter here. So in this way, what you can do is use this indicator on the 5-minute time frame for your benefit, and I've already explained all the rules for both buying and selling sides. Now, I told you earlier that I would share a golden rule. This golden rule is something you must use. If you don't, this indicator won't be beneficial for you. That golden rule is VWAP. So, whenever the price is below the VWAP, you'll get more selling opportunities, and similarly, if the price is above it, you'll get more buying opportunities, like this. Let me try to explain this with an example. Imagine the flow of water is steadily moving forward, and you're walking in the opposite direction. You'll have to use a significant amount of extra strength to go against the current of the river. But if the flow of water is in the same direction you're going, you'll be able to move ahead much more easily. The same thing happens in the market. If the trend is bearish, then if you take trades on the bearish side, your chances of making a profit are higher. Similarly, if the trend is bullish and you take trades on the bullish side, your chances of making a profit on the bullish side are higher. So this Q app is very important for determining the trend in indicator strategies. You need to use it as I explained. If the candle is below it, then the market is downward. So here we only look for selling opportunities. We won't look for buying opportunities if it's not above it. Similarly, if it's above, we'll only look for buying opportunities. As you can see here, I'll only look for buying opportunities. So I hope you've understood this golden rule and how to use it. If you use this indicator, first do a backtest. If you find in the backtest that this indicator's strategies are beneficial for you, then go ahead and use it. I hope you found this video informative. Like the video, share it, and subscribe to our channel. Thank you so much, guys.